Hello, everyone. Good. Happy Tuesday afternoon. How are you doing? Hello, Jake. Jake can't remember the last time when the market traded like this for this many consecutive days. It's been in a really tight range, although the Dow's rolling over. It's not a healthy market. It's what's in the title of this. We'll go through that in a second. It's just not healthy. So, options 22, hello. Else is going on? Let's see. We had retail sales. We covered that this morning. Since that time, we had capacity utilization. We had business inventories coming in weaker than expected. The only strong number today was the housing market index. That was a big surprise, the upside. And we had more Fed speak. Tomorrow, as options 22 asked this morning, what's coming up to the rest of the week? Well, there's nothing really tomorrow. Remember, OPEX on Friday. We got the mortgage stuff coming out. We got building permits and housing starts, very minor right now with moving the market. And we got our EIA numbers for crude, and that's it. So tomorrow is a very minor day. Pretty red day, except for some mega caps and a couple chips, AMD. Up 4. This market is getting so concentrated into a small handful of stocks that's literally keeping it propped up. That's why I'm saying it's not healthy. It's so much of what reminds me of past key little topping areas when you have broad market weakness just being held up by a handful of stocks. I mean, Google's still running, Amazon, AMD, which is in valuations are insane. Hey, Jacob. Almost an inside day? Well, we'll get there in a second. By the way, no Bob today. He is under the weather. Comm services, the only sector that was positive, followed by technology, which is pretty neutral, and everything else negative. Pretty broadly negative. CME Fed Watch is 82% for the pause. Coming up in 28 days and 21 minutes. Finally dropping out of greed back to neutral. And we don't need to look at that. Okay, in terms of earnings this afternoon, Home Depot bounced back after taking the shorts. And those earnings, I started to look at the earnings more. It was not a good earnings report at all. Even though they beat EPS, it was not a good, strong report at all. Big gap down, but then it seems like they just becoming buy every dip. After the close today, nothing. Tomorrow, I'm going to look in TJ Maxx and Target. Sorry, Jack in the Box. You're down on the list. And then tomorrow afternoon, we got Cisco. That's the big one tomorrow afternoon. Here, let's see. Let's get back to S&P. Yeah, today, I broke low. So, I mean, we're still have an inside day from Friday. Okay, it was not an inside day from yesterday, which was also an inside day for Friday. But there's still the buying pressure down here, the selling pressure up above. Nothing's really changed with my levels. Daily cycles in the neutral, weekly cycles still heading lower. But you see here, there's the S&P. Let's go to the equal weight ETF. Look at this. Equal weight ETF. This is broken down. Well, why isn't the S&P breaking down? Because it's cap weighted and you still have some of these mega caps barely trying to hold it up. See this? This is the low close. This is the lowest close since back at the end of March. March 28th. So this is rolling over slowly. Let's take a look at the NASDAQ. NASDAQ still up. But also the tech compared to, and I'll throw comm services in with tech. I'm lumping a lot in with tech. But the valuations to the rest of the market are off the charts again, insane. And that has not ever ended well in the past. It's getting too tech heavy, too consolidated into just a few group of stocks that holding stuff up. But there's the NASDAQ market cap weighted. Here's the NASDAQ equal weighted. So NASDAQ equal weighted down 97 basis points, almost 100 basis points. The NASDAQ up 28. Why? Because market cap weighted It's a small handful of stocks holding it up. Hitting this key cluster area today. If we do break through 13,581 and this continues, we got 13,620 as a major level. The Dow retesting the lows from Thursday, May 4th, but continuing lower. Back down. It triggered on Thursday, May 4th, the double top pattern, and we're now closing. It looks like we're going to close lower than even the trigger point. This rally did nothing to invalidate the pattern, and I'm really focused on this first area with the 200. So, Russell still caught in the range. Russell, was this an inside? No, not an inside day. But still caught in the range, watching for the breakdown in this, but Russell off 113 basis points. The VIX, not any fear still. Up close in the VIX, but still testing the key resistance level and backing down from there. VIX one day up a little, but still in the range, nothing there. The DAX also, whole bunch of nowhere. Whole bunch of nowhere. Got a lot of these markets, whole bunch of nowhere. Again, like the S&P, whole bunch of nowhere. Where are we going to close? We're going to roughly close at the opening price from Monday, April 3rd. We're May 16th right now. Again, some of these, there's so many scalping opportunities. Notes, nothing. Closing right at the 50. So, yield, people were talking about yields today. Yields still caught in the range, although creeping up just a bit. Dollar index. So we did not break above the one-day pausing bar. We have formed a little mini potential double top. So if this does trigger with a 4-hour close below 101.78, I'd be patient waiting for the bigger pullback. If it does not trigger, now this isn't as strong as it did not break above the one-day pausing bar, but if it does still break above about 102.33, my next target is 102.80, 102.77, 102.80. So as long as it does not trigger that little mini double top, then you know what, I'm still watching for that breakout. Crude, boring. Nothing going on at crude either. We'll watch to see if these little this prior pullback area holds, but that's about it. Gold taking the shorts. Gold, the potential double top that never confirmed or triggered, off the table, down 145 basis points to retest very key support. Even on a slight break lower, we have the 50 in the way. Now we start breaking the 50, it could get pretty interesting in the gold. Remember silver, which did trigger the double top back on the 11th of May. Continuing lower today. It does have a little mini potential double bottom, which is still in play. It would need a daily close above 24.40. And that would just be for a potential pop to 24.88, which would not invalidate the double top. But that is not triggered yet or confirmed. Copper is rotating on down. Copper, lots of weakness in copper. The yen hitting the first target area. So stop raise from this pattern on the yen. So the technical, the furthest away level would be on a close below 134.69. The pattern's invalidated, or a trade through 134.29. It's invalidated, not necessarily a close below that. Other than that, I'm still really focused on returning this 200. Euro does have a little 4-hour potential double bottom. Need a 4-hour close above 109. With a potential run back to the two major targets are 109.50 and 109.63. So we'll be keeping an eye on that. And if that triggered, we'd get probably the double top in the dollar to trigger too. Pound, this is a horribly sloppy, that if it pulls back much more will be invalidated, but it's confirmed and not triggered. So we'll check in on that tomorrow morning. I don't want to waste a lot of time on that. Bitcoin, Nothing. Let's check Tesla. We have the whatever day they're having this afternoon going on now. But nothing much. Very neutral day in Tesla. Still watching for the next rollover play there. And let's see who's here. Good afternoon, Christoph. Why not a healthy market? I think I covered that. What were you doing on your roof, Patrick? Be careful up there. AMD potential weekly double top against resistance. Well, AMD, well, let me just change my tab over here, does have a weekly potential double top against key resistance. Very, very good, Jake. The super smart audience. And that could take it back down to the low area from last October. But remember, and people who watch these on demand and everything else who aren't regulars get confused. Just because you have a potential pattern does not mean it ever has to trigger. People go, you're bearish on AMD. Well, long term I am because of insane valuations, but this pattern does not have to trigger. It's a potential. People just get so confused on that. So confused. If it does break out, because you have to analyze both sides. So if it does break out, you could still get 108.41 and 114.40. Let's flip around our harmonics too. Remember, the insanity can continue longer than we think. And look at that. Right above that 108.41, we got 109.51, which is the 50% retracement. So could this head higher and still not trigger the double and even invalidate it? Yes. Would the valuations even get more insane? I mean, it's only got a P/E ratio of 403. That's a downright bargain. We're not going to look at Google again. It's still marching higher, as I'll call up Google. There you go. Again, next key, 122.80, 122.90 area. The majors, 126.36. There you go. Good evening, Anissa. We looked at gold. I see the likes of and more people who keep an eye on buying Apple, Microsoft, and Nvidia. I don't understand what they are seeing here at these PEs. I think people are chasing some returns and they think they'll hold up better than the rest of the market. I'm not in that camp. Okay? And I don't see what they're seeing either. Although in the short term, the trend is up. So from a short-term trading perspective, would I be chasing them higher and initiating new positions? No. Would I be in trailing mode? Yes, with a trailing stop. Can this keep going? I mean, Microsoft is trying to break through its key resistance. It hasn't yet. But even on a pullback, you still have the daily rotation zone just below. Now look, remember, things don't really have to correct majorly to the downside. Can the insanity continue? It's closing in on its next major target, the 75% harmonic. Remember, look at April. Sideways correction, rising weekly rotation zone, and launch mode. This could theoretically pull back a little, but mainly go sideways and go in launch mode again. Insanity can continue, but that does not make it a healthy market. And when these things roll over, they roll over quickly. Okay? It wasn't healthy back here last July, last August, last September, and then look how quickly it fell. So we're getting to that similar thing. That's why, but you can trail a stop. You can trail a stop in these things. But would I be chasing higher like for I'm going to buy this, I'm going to buy Nvidia and park it in my account for a few months? I sure as hell wouldn't. Nvidia is starting to get some waning momentum up here. So, what are people seeing? People cite these smart people all the time, but I've disagreed There were smart people who a lot of people were citing at the end of the dot-com saying those valuations weren't going to come down the way they did. There were smart people saying in 2008, 2009, it's not going to be that bad until it was. How much do I care about stock market seasonalities? Well, they've waned a little because of all the over the last, when money was free, it blew out a lot of the seasonality pattern, which was typically sell in May, go away. But with free money, that sort of overrid that pattern a little. I think that could be more so back in play. Okay, I think we'll see more seasonal patterns with the withdrawing of free money, and with interest rates where short-term rates where they are now, I think you'll get more seasonalities in play. Where sell in May, go away doesn't mean it has to drop, but it means you can go at a whole bunch of sideways. So, and again, why I'm covering this as not a healthy market is because I don't like to see a few stocks trying to barely hold up a broad market. And you have key companies like Home Depot. Look into their earnings report. It was not strong. And Home Depot is a very key company. I'm curious which you like, AMD, NVIDIA, or Tesla for long-term put spread. No, not financial advice. Thank you for putting that in there. They all have monthly cycles at the top and are rolling over. If I had to choose above those three, I'd probably play AMD because technically and fundamentally it's the most overvalued. Tesla's a hard short. You have to get your timing right, and then you have to wait for the momentum to kick in to the downside. Okay? So, out of those three, my primary one, once we get a rollover play, is AMD. You also have the potential double top, which again doesn't have to trigger. But trading at 403 times earnings, even if you're growing earnings, AMD is not a company that's growing earnings at a rate to warrant even 100 PE. Hey, Todd. What would confirm the double top in AMD? We'll go back there. Since it's you could do it on a daily close below 81. What I would do based off the strength of this, starting to get the daily close, you could initiate a partial put spread, and then on the weekly close, or if the weekly closes down, and then on a little bounce, if it closes too far from the thing on a bounce, add on the rest of the put spread. But it would be first side as a daily close because this is a valid pattern on the daily, and even more powerful would be the weekly. Yeah, Microsoft is in a very key area right now. TSM. TSM on the daily. Let's just look. TSM, it's just a little channeling flag pattern at this moment. Did I miss that? I think I missed a pattern here. Yeah, I did. That is actually, pull off this for a second because this is a stronger pattern. This was actually a triggered I missed. Oops. I missed this when I was going through charts. That is actually a triggered weekly double top. And it had to be triggered on the weekly because it was too sloppy on the daily. But a little flagging pattern back in there, I'd be watching for the next rollover play. I know you won the daily, but we see this channeling pattern back to the breakdown area. And why it was sloppy, because this is a very wide thing, so you needed it to trigger on the weekly, which it did trigger back at the end of April. Mike, technically, if we see moving averages are stacked up for the spider, but PE does not make sense and momentum is confusing. In this case, what parameters apart from volume can be used to judge further price action? When you mean stacked up, do you mean like clustering together in the middle? If that's what you mean, then what I do is watch for the major breakout or breakdown plays. What I start doing when these things flatten out in the middle, what it's doing is I'm watching then for the major breakout, which would be on an initial daily close above about 416, or breakdown, which would be on a close below about 404. Other than that, it's just scalpy trading in there. So as moving averages go flat and cluster towards the middle. And if you look here, even if it breaks down here, I'd watch the bottom of the weekly rotation zone. That's a good statement, Todd. Re-expert, more often they are just mouthing consensus, and a lot of people like to go along with consensus. I'm not really a consensus person. I'm not against consensus, but I don't look to be anti-consensus. I just sort of would rather march to the beat of my own drummer and do my own analysis. Doesn't mean I have to be right or anything else. That's why I don't watch a ton of financial media out there, because I like to do a lot of my own stuff, and most stuff is crap out there anyways. Thoughts on a Target Walmart miss? I think the consumer is rolling over more and more. Target is just sitting in a huge consolidation pattern. So there's not much of a setup there. And even, some companies can do some interesting things. It's really going to be off guidance also for Target and Walmart. Like if they go, consumers getting in trouble, we're going to have to start changing stuff. We're losing foot traffic, blah, blah, blah. Even if they were to beat earnings, their guidance is going to be very key. And remember, Target tomorrow morning, Walmart is Thursday. Walmart does have, you can really see it on the monthly, the double top. And why isn't this a triple top? Well, I'm so glad you asked. Because it's reversing this move. And you can see even on the monthly, the first and second targets are within the move that started it. And the third target's within the low that started it. First and second targets have to be within the candle bodies. So you can see that. That's why this is not a triple or a quadruple or a quintuple. It's just a major resistance area, and it's formed a potential. But it's a long way off from triggering. What's interesting is on the weekly, look where the weekly 200 is. So, but there is, and Walmart's interesting. I mean, see, I wouldn't want to be paying up. People go, well, it's Walmart. I don't want to pay. This is why I can't find a lot of value in a lot of stocks either. 35, I don't want to pay 35 times P to E for Walmart going into a potential recession. I'd rather take advantage of it once it's dropped and PEs are much more in line. Why? Because it only pays a 150 basis points of dividends. And look at the capital loss I could take, and those dividends aren't going to offset that. Now, this might never trigger, but I still don't want to be chasing Walmart at 35 times P to E. I don't know why it feels like now that they have the convinced market participants to buy the dip, fall will come sudden and most of us won't have time to react or will buy the dip and get stopped out. And I don't understand it either, especially with short-term rates still paying 5%. I would take 5% risk-free, then chase this market higher. And I'm talking chase it with a bunch of different stocks where I'm going to have to, you know what? Yeah, you can trade the futures because you can put, it's so liquid. You're not, even if you're trailing a stop, on a pullback, you're just out. And you could, that's why I wouldn't chase it higher now, but I'd be looking to lock in gains. That's why I'm harping on the same stuff. I'm trying to point stuff out. I'd be in trailing mode. Look at your PE ratio on the S&P 500, almost 24. The Schiller PE ratio, 20, it's back below 29, it's 28.81. These are not bargain numbers. You know, based off this kind of stuff, you take the traditional PE ratio with interest rates where they are now, we should be trading closer to a 15 handle PE, based off where interest rates are now. Not 24. That's why I don't, you know what? And I don't understand why people think it's the only game in town. It's not. When it was 0% interest rates, it was the only game in town. But you got 5% rates, risk-free essentially. Because even if the government were technically to default, they'd make up interest payments. They're not going to jeopardize the global treasury market. So, all right. Look, I'd rather park more money. And if somebody said you either got to buy Walmart or park more money at 5% interest, I'm parking money at 5% interest than buying Walmart at 35 times PE with only a $1.50 dividend. When it's trading against a major prior. Look at all these tops. Look at how many times it's topped out in this area. That's my stuff. I mean, so I just have a different viewpoint. But people want to be long. My advice is know where your stop level is. I have no problem with people being long. But we start rolling over. I wouldn't be long the Dow at this point because of breaking down play with the trigger double top. NASDAQ would be in trail mode. S&P, especially you could still theoretically be long above until about 40.80, 40.70. You start breaking down here, would not want to be long anymore. I wouldn't even want to be long if it breaks down below the 50. And I'm not talking on an intraday basis. This was a little mini double on the 15 minute. I saw Pep in here with... This was a little mini double. That's been triggered against the rotation zone. But that's just a very short term thing. No, would not be surprised to see that play out against this key support. I'd really be watching again with gold closes below the 50, and we have a lot of key support. You could see some short-term profit taking in gold, and then finally get that bigger pullback. All right, just a couple more. Hey, John B.A. This is another one. You start breaking, you get a close below 196 or even 195, watch out. Quick trip to 182. Could be a very quick trip to 182. You can see here's that 25 harmonic too. I'd probably use 183.70 as a target area for a first breakdown trade. And then 171.16, then 158.62. But I'd really focus on 171.16 as the next target with the prior breakout level. This is setting up, this is losing momentum. You can see rotation zone on the weekly's going flat, but it needs a confirming close below there. Target has no setup right now. Target has nothing. It's a little better value in my book with higher dividend yield and a little better PE than Walmart, but I'd rather be looking at that down around 139, not up here at 157. The market doesn't care what the market can't care what people think. It doesn't think. The market always does the opposite of what people expect. Well, some people expect bearish moves, some people expect bullish moves. So it can't do the well, I guess it could sit in a range, but it doesn't always do the opposite because you don't have everybody bullish or bearish. You have a very mixed consensus market right now. So it can't always do the opposite. Now, long term, some people are going to be right, some people are going to be wrong. eBay triggered a daily double top and broke out of a bigger bear channel pattern. Yes, it did. Christoph, the master of the doubles. First target hit. Breaking blow here, breaking blow this prior. Sir Double Trader. That's what we'll call Christoph. Again, that was a nice breakdown. Mike, does raising new debt drain liquidity to buy bonds from equities, sideline money, or does it raise liquidity by providing spending power to the Treasury General? Well, they'll have to refill the Treasury General, which will drain money from elsewhere. You know, draining the Treasury General has been sort of a anti-QT. So once they start refilling the Treasury General account, it will have more of it will go back to more of a quantitative tightening effect. So right now we've had the Fed quantitative tightening somewhat offset by the draining of the Treasury General account. Once we get a resolution with the debt ceiling, which will happen at some point, you'll have the refilling of that. They'll have to refill it, and that will provide more of a tightening basis. You're welcome, Todd. So nothing for the earnings tomorrow. It would just be at this point because you got earnings, and then, as I said, you got guidance. I expect that even Target will have to show some weakening guidance if the consumer's starting to roll over a bit more. Retail sales weren't that great. On an inflation-adjusted basis, they're really not that great. The consumer credit card debt is somewhat rising. You're getting more charge-offs. Consumers starting to feel it a little more. Targets that, the middle tier, not the Walmart tier, but a little higher than that. So it might have a little stronger results. But again, it's all going to depend what they give guidance, especially. Even if they do a beat, guidance is going to matter. And when there's no pattern, in this, look, I'd rather have a drop down here and watch for a bottoming pattern, or a beat and a rally up here and watch for a topping pattern. Right now, you're smack dab in the middle. Wonder if I take load. So when I have this, it's just, I'm not, unless I had it was a sector I really studied and I knew the ins and outs. Look at this. Here's the 50, here's the 62.5. From the low of the range to the high of the range. We're smack dab in the middle. If I had to bet, I'm betting lower just because we did get a close below the 62.5 back at the beginning of May. So, from just a pure technical analysis perspective, I would, if I had to take a gamble, and that would be a gamble still, I'd bet on lower prices after earnings. Daily cycles at the top, but weekly cycles at the bottom. I mean, look at the weekly. Don't type it anymore. I'm STNE. Again, earnings tomorrow. You do have a potential double top pattern. Again, since it's not triggered, it doesn't mean it's necessarily bearish because you're going with the trend has been up. But you get a close below 1309. Can watch for a bigger pullback to the prior breakout zone at least. You see here? Prior breakout zone. Now, if it beats, I'm just looking for a good anchor point. On a beat, your targets are 15 and then 1577. And look, what does harmonics take you just shy of this really strong resistance base. And then Cisco. Cisco again, it doesn't have a fantastic pattern. It's almost a really sloppy inverse head and shoulders. You don't have a well-formed. It's just a mess. On a pop-up, I'd be looking at 48.14. On a lower thing, let me just, because we already rolled over between the 50 and the 62.5. Your key support 45.57. If you break below that, you're 43.84. Close below 43.84. Uh-oh. But again, there's no fantastic pattern. Cisco at least isn't overvalued. It could still drop, but it's only trading a PE of 17 with a dividends. I'd rather see them drop, dividend yield come up, PE come in, and then watch for a bottoming pattern. What point will you be of consensus that October lows will be retested? Break of the two. Here, I'll just go through this, then I'm done. Here's what and I said it on, I've been saying it on the podcast. But the first early warning sign is you start closing below about 40.40. The next key break point is 39.88. And I'd be looking aggressively on that breakdown for shorting opportunities. The major line in the sand is 37.66. Why? The probabilities really shift. That does not mean I'm going to wait till 37.66. There will be opportunities before then. But you have to just look at where the 50% is. There's lots of support around there. So there could be shorting opportunities, and then the stop gets lowered and partial profits, and you might get a bounce. Then you break it, more shorting opportunities. And then we close below 37.66. From my perspective, it's time to press the bet for breaking down to October low area. Okay? But does that mean I sit there and go, oh, down day, time to put on the shorts? No, we have tons of support just below here. The market doesn't have to break down yet. Although we start breaking this below that 40.77 area, that 200 is a juicy target. Can you pick on, I don't understand, Mr. Hent, dollar keys? What do you mean by that? Then I gotta get the doggies out. Inverse head and shoulders on the weekly. Thank you for typing in the time frame. Inverse head and shoulders on the weekly. ROS. You mean that? No. Of this from before? Shoulder, head, shoulder? Yeah, but that's played out. Yeah, that worked from before, but that's done. On the shorter time, this was a double top. Very sloppy on the weekly basis, but that's the only other pattern that's played out. Now you have nothing. I don't see any great pattern in here right now. If you start breaking below about 100, it could get interesting. With targets, if you break below the support base, 101 is even on a closing basis. 95.84 and 89.19 is the next big support zone. All right, this is where I'm stopping it. Keys. You had a beat. Yeah, that's technically was a double. Hitting the first pattern. Hitting the first stop loss. So if Keys bounces back up, you're looking at 149.98, then 151.31 as your next target areas. Invalidating that pattern at this point would be on a close below 143.23. And now you've hit the stop, you're doing a pullback, which is normally why there's a stop raise at least there. So you're pulling back. You don't want to start seeing a daily close below about 145.50 with daily cycles at the top. All right, that's where we sit, Mr. Hamza. You're welcome, Pavneet. Hope I could answer everybody's questions. I shall see everyone tomorrow morning. Have a wonderful, wonderful evening. And thank you for tuning in. Bye for now.